We've had such a great move in the market, particularly the domestic market, that we also have taken a little bit of exposure off more recently. However, we've maintained an overweight in international equity where we think we haven't seen the move there. There are some signs of stabilization in China's economy, and that could get things moving there. So we think any stabilization in the global economy would really help those assets that are incredibly undervalued, relatively speaking.
Okay. If your brother was here, he would absolutely scoff at what Weiss said.
I'm scoffing at both of them right now.
You disagree?
Yeah, I totally disagree. Absolutely, I disagree.
It's a Nigerian trade, I guess.
I guess it is the Nigerian trade. No, but when I'm looking at
the market's been up so much since Christmas Eve.
It's been up a lot. And what has happened in that time frame that actually pushed it up?
Nothing other than the Fed.
Well, wait a minute.
We changed our whole game.
Whoa there, cowboy. Nothing? Oh, let's see. The government was shut down. Now it's back in, right? I mean, there's one. Right? I mean, let's just go through the Fed. The Fed was against us. Now they're with us. Now they're the wind behind the sails, right? I mean, so there's two. There's a lot of different parts of the earnings season. Far better than most everybody expected. Wouldn't you agree?
Never traded down because of the government shutdown.
Wow.
It was like it didn't happen as far as the market was concerned.
I would disagree with that. I would say that the markets were absolutely looking and had a feel for what was going on there and what some of the impacts could be. And fortunately, we resolved that whole issue. But there's a lot of issues that have happened that we've cleared by. And the next one is China. And what kind of deal? If the deal is a good deal, which is the president seems like he's willing to at least press these dates. We talked about that yesterday. It's not March 1st, blah, 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 all that kind of thing, right? But what kind of deal do we get? If the deal is a real deal.
He's going to say it's a victory regardous of what the deal is anyway.
Oh, the president will say it's a victory no matter what.
How much you think you get out of the market if there's a deal?
I think you get a
how much more?
You get a hefty move to the upside, and I think the people that have the 3,000 targets on the S&P are probably right.
See, I disagree, and I think that, in order to get the market moving, we need to have more positive news on earnings. So during this last earnings season, there was basically a window that was open for companies to give conservative guidance, especially for the first quarter. So I think we need to get through the first quarter, and if earnings are actually better than everybody's projections, then maybe that's what gets us the
But didn't we beat on 65%?
Who cares of what just happened? It's all about what's really ahead, isn't it?
Right.
First quarter earnings.
But
I mean, you still have
even to the earnings beats, it was actually below the 5-year average beat that we had. And when you reset expectations lower and then you beat, like with an Apple, it's not a beat, right? Because
even though it was a record number, huh? That's interesting.
Record means nothing.
The market is not going to move. The market's not going to move on either whatever remains of fourth quarter earnings or the first quarter earnings. The market is going to move on what the second half of this year is going to bring.
You've maintained consistently that you think the biggest issue hanging in front of the market is trade, and trade.
Yeah, absolutely. And by the way, thanks for repeating it 3 times because it's not just China, it's Europe. Yep. If we weren't worried about China, we'd be big time worried about Europe and the auto tariffs and the metal tariffs and how bad their economy is. But to the point that I'm trying to make here, forget the first quarter. We already know it's going to be a lousy quarter vis-a-vis last year's first quarter. What the market is concerned about is the second half of this year. And let me make this clear, let me make this simple. If tariffs are off the table, that's what I'm looking for. If tariffs are off the table, then you can get to a run rate in the second half of this year that would be equatable to $170 a share on the S&P 500 earnings, and you can go to $180 a share next year, and you're off to the races.